Uh, so let me ask you this. When you look at UTI Large Cap Fund specifically, what makes your strategy distinct? What do you do differently in identifying and owning these businesses?
The core of UTI large cap is the competitive franchise or moat. And we look at the moat of the company in each sector within the top 100 companies of the large cap universe. And we do have some exposure outside the top 100 companies also, because the mandate requires we need to have 80% plus in the top 100, while we can still own some mid and small cap companies. The approach is similar for whichever market capitalization, large, mid, or small. Idea is to kind of identify companies which have some kind of mode which can be tangible, intangible. They may be like a brand, a distribution, multiple modes which help them create value much better than the competitors. So that's where their balance sheets are much better, their return ratios are better, and they score well on the overall it's the ROC parameters as well. So that's the key thing. If you look at the next slide, we are talking about the moats. So whether it is tangible or intangible, what brands, I mean, in case of consumer companies, it is the brand which resonates with the consumer. The recall is what clearly helps them continue to hold on with the market share or even improve their market share. So that itself is a competitive advantage for the existing companies vis-a-vis new entrant kind of challenges these companies. Similarly, there can be patents which some of these companies would directly or their parents internationally could bring in for them, which acts as a kind of a differentiator. Similarly, technology is something which is kind of a moat on the tangible side. Again, tangible is something that is clearly visible, and we could have the lowest cost producer in some of the manufacturing sector, or in case of B2C businesses, the distribution itself acts as a moat, which is very difficult for a new entrant or a challenger to kind of break through. If we take a few examples to kind of drive the competitive advantage point, in case of private banks or in the banking space itself, the cost of funds is the biggest advantage for a bank, because that's the raw material, and if the raw material itself is cheap, they're able to take lesser risk and still achieve that spreads. So they don't have to get into riskier lending. So that's where the cost of funds for, in this case, ICICI Bank being the example, we've seen that acts actually has helped it kind of control its overall credit costs and still deliver growth and profitability. On the right hand side, again, stainless steel, this is the single largest player, and they have a disproportionate market share and relationship with the end user customers. Many of them are B2B, business to business, and to that extent, those relationship and the quality products that they're able to supply, besides the large capacity that they have, actually holds them in good stead compared to the cheaper imports, which are the real challenge in this case. For some more examples, like, I mean, in terms of retailing, it is all cost, which is the key focus. And here we see in the value retailing, we have a company which is clearly focused on bringing down the cost of operations year after year. So that helps them kind of face the competition or gain when compared to many of the other competitors in the space, without having to kind of increase prices. So it is the cost which they are trying to focus rather than on the pricing side. Again, telecom is one sector where and we've seen huge competition, but the strong brand and the customer relationship and strong balance sheet has helped this company kind of tide through that challenging environment that we've seen in 2016-17, when the prices were almost dropped to zero. And from there, we've seen quite a few competitors have left, and the number of telecom operators has come down to just about four. And there's been consolidation in the industry, and Bharti, who's been there with the right ingredients of brand relations and balance sheet, has continued to gain market share. So these are some of the examples from our portfolio where we've seen that the competitive advantage has helped these companies kind of do better in business, whether in terms of top line or costs or profits.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.